Okay, guys, let's get into it. Today, we are going to tell you exactly how to call the market tops and bottoms. This is going to be extremely important for you guys, and you're going to want to share this with everybody that you care about. And you're going to be in the small class, the 1% of people who actually get within a 5 or 10% away from calling and making sure that you are taking profits near the market tops and near the, and then you'll be able to buy back in somewhere near the market bottoms. This is going to be extremely helpful for you guys. Let's get into a little bit of history. But first of all, welcome everybody to the chat today. It is Friday for Fired Up. Give me some likes. Destroy the like button. Say what's up in the comments. Let me know where you guys are calling in from. We got somewhere in Korea in here. What's happening? Adventure your life. What's going on? What's going down? We got Sebas Braz. What's happening, man? MCW. Kachako Crocodile, 21st Dimension. Let's go, Kyle. Let's go, let's go, let's go. And let's see if the comments are working. Are they working? Let's see. Yep, there we go. All right, getting more professional of operation here. All right, with that being said, guys, let's dive into it. Let's dive it without wasting any more time. This is going to be a very valuable video. You guys are going to walk away this weekend just how did he know that? Wow.
How did Kyle know that? He must be a genius.
Such a genius. Okay, so we have this cycle theory, right? The 4-year cycle, and it's a little confusing because people are always asking the question, what do you think the price of Bitcoin is going to be? And a lot of people, think it's, we're guessing here. It's like throwing darts in the dark, right? And so you can see that, and we also know that Satoshi has been somewhat of a genius where he has timed the release of Bitcoin to coincide, and the halving cycle to coincide with the 4-year presidential cycle. And that is because in that time period during an election year, no matter what happens, the presidential candidate, the party in charge is going to do whatever it takes for them to be reelected. They would never be reelected if it was during a bad economy. So they're going to do whatever it takes. And oftentimes it's money printing, which means markets go brrr, and we go brrr, and we get really, really rich in those times in the year afterwards, right? So we have all the halving events happening here, and this is where we currently are over here. Wouldn't it be nice if we bought anywhere in here, right? It doesn't have to be here exactly, but if we would have bought here or even here, or we would have sold anywhere within over here, this would be nice if we had some sort of indicator. And I'm telling you guys this, that it is really, really, really hard. It is really hard when you are making so much money, right? In this period of time, and this is a monthly, I believe, like it is just going up, and you're waking up every single day and your portfolio is like twice as valuable as it was the day before, or at least 25% more valuable than the day before. And so where we Kyle meme coin. So Anthony, what's happening, brother? It's good to see you every day in here. Thank you for joining and tuning in. So that's what we're gonna talk about today. We're gonna talk about how to get our game on track a little bit, because when you are making so much money, it's really hard to think about selling, right? Because Bitcoin is at like 100, we think it's going to, we know it's going to 150. So why would I sell now? Or when it's, it's at 150, it's like, oh, do I sell now? Or is it, but now we're like, there's so much bullish momentum and everybody's bullish. Everybody's throwing parties. This is not stopping anytime soon because it's just straight up. And we get inebriated of being rich, and we start going to Michelin star, 3-star restaurants, and we start dressing in tuxedo. I won't do that, but you know what I mean. You know what I mean. We get carried away, and there's so many corrections along the way that we just start to think that they're normal until this correction happens, right? And then we're like, oh no problem. It's just another 30%. But then this one happened, and then you're just like, oh shit, it's too late. Like along here, right? And it also seems like the same thing here. If it was, here, like a lot of people are thinking, oh my God, we didn't top again, guys. We barely tapped. We just kissed all-time highs. But what we're showing here is there's 2 different schools of thought when we think about time frames, right? And you'll hear a lot of people talk about this a lot. So you have the last 2 cycles, essentially, you've had 518 days from the halving to market top, 546 days from halving to market top. And if that same time frame plays out, thank you, destroy like buttons, guys, if you're excited to hear this news, which you must be, and share with everybody. So if that same relative time period plays out, then this bull run should top theoretically somewhere between October, November 2025, which gives us a long time ahead, which is what I'm hoping for, right? I'm hoping for that. But then you have the other school of thought, which says it's a number of days from halving to breaking all previous all-time highs. Now, since we did, or not even from halving, from breaking all-time highs of the previous cycle, right? And so this one here is essentially, let me see, this number of days from breaking previous all-time high to next all-time high. Yeah, so this one here, people believe because it was such an accelerated one from the all-time high to this breaking all-time high, well, this last time, right? It happened before the halving. So you hear a lot of this kind of thought about an accelerated cycle. And if that's the case, we're going to have if that's the case, it would bring this bull run to an all-time high, massively accelerated from October, November next year to possibly as soon as December this year or January this year, right? But the longer that we chop, because right now we hit all-time highs, we kissed it right over here, and then we came back down. We just barely kissed it, and we came back down below, and now we're just going to be chopping sideways. So the longer that we chop sideways, the more likely it is to get into this, into the kind of the normal 4-year cycle and the normal kind of time period to put us back into 2025, right? Either way, that's not what we're relying on today. These are just numbers and timeframes, and we're going to show you multiple different ways of tools that you can use to keep in your mind to give you a better picture of where we are in the markets. And not any of these things individually should be used. So we're not going to look at price. We're not going to look at time. We're not going to look at one particular indicator. We're going to look at the basket of everything, and it's going to give you a pretty damn good idea of how to play the markets. And you'll see as we go through a couple of these things on TradingView, and they're all free tools, guys, all free tools that you can use. So literally going to most likely save you tons and tons and tons of revenue here and allow you to take profits when you are still rich rather than feeling horrible and poor again. So Rex Capital says, the more Bitcoin consolidates anywhere between current price levels and $70,000 after the halving. Thank you, Wanton Wisdom, by the way. Love you too, guys. This live stream is great. I have a fun doing it with all of you guys. Hi, Silicad. What's happening? Good to see you here. Okay, so Rec Capital says, the more Bitcoin consolidates anywhere between current price levels and $70,000 after the halving, the more this cycle will decelerate and resynchronize with its regular, historically reoccurring halving cycle with a bull market peak in mid-September, October 2025. The current rate of cycle acceleration has been reduced from 260 days to 210, thanks to the Bitcoin's current 2-month consolidation period, or chop consolidation as we call it. So you can see here in this red zone here, the longer that we get, the closer we get to this red line before, this red line would line up historically more or less with the previous time periods. And it would, so the closer we get to that, the more it invalidates this accelerated cycle theory that people are talking about. So, but it doesn't mean though that it still can't trend up, right, in this time period, and then from here go parabolic. Any way that you look at it, it doesn't really matter because these time frames are going to be essentially irrelevant for what we're about to learn. Thanks, Vic. Love you too, brother. Good to see you here tonight on Friday. Let's see, it's Friday night over here. And so let's get into a couple of these things. So the first one is going to be what's called the pi cycle. So what you guys are going to do is you're going to open up TradingView, and this is free for everybody. So let's get rid of the volume. Let's just look at data here. And so what you're going to want to do is on this pi cycle, you're going to want to go up here at indicators, and you're going to type in pi cycle and pi cycle Bitcoin top indicator Bilzerian candle, right? And go ahead and click a favorite so you always know how to come back to it. You're going to click that one, and when you come back to your screen, it's going to look something like this. And what we want to pay attention to here is you want to make sure that you're on the daily time frame. It only works on daily time frame, right? And so what we're going to do is we're going to go back here and we're going to look at every time it says that it has the pi cycle top. And so we'll zoom in a little bit here and we'll draw a vertical line. I already did that. But every time this red line crosses the green from underneath to above, it marks this pi cycle top. And so we zoom in here, and you can see this time it didn't exactly call the top, but if you had sold here and you had bought in somewhere over here, that's a good run up, and it's a hell of a lot better than selling down here somewhere and round tripping it, right? Like, and that was the least accurate one. But as we continue to move forward here, let's look here at pi cycle top, and we will drop a line vertically there just to kind of show you. And we'll zoom in a bit. You can see here, right where it crosses, right here. Bam. And so this will drop in automatically. I didn't label this. And so I know for me too, it was a little bit confusing on the chart because you can't really see here because it kind of turns this like black area where it crosses. But the data shows like when these indicators cross or merge is exactly when it'll drop this indicator on the chart as well. But regardless, even if you had sold a tick before or a tick after, anywhere in here, you would have been very, very good. And it's very clear. So right now, where we are today, it looks kind of like this to me, and you'll see that in a second. It doesn't look anywhere close to these lines. Like you start to get really cautious and watching this thing very closely as these lines start to get perfect together. Browser's addict here. Yeah, careful. This pi cycle indicator was made like in 2019, so it's used from old data. Yes, it's true. It is used from old data in previous cycles, but it backdates it perfectly. These are not like people don't draw these lines out of like they don't draw them out of just like an artist drawing these. Like these are actually from data. These are moving averages, right? So it's literally you can backdate kinds of things like this, right? And it still holds valid for currently, and I'll show you that in just a second here. So. All right. Go away. There we go. Okay, so let's go over to the next one here. And you can see as we go to the next cycle, which is going to be here, the 2016-2017 cycle. As we follow along. And here we go. We're starting to see this run up. This is 16 when it kind of goes up, and then bam into and people would have thought, maybe people thought this was the top here, but nope. Keep going, keep going, keep going. And now they're starting to get a little tighter, a little tighter, a little tighter. And here we go. Bam, look at that. When they cross here. So that is when, this is starting to get really, really, really tight here. And so here's a pi cycle top, and you can see that this is when you would have want to have sold. Anywhere, again, and here would have been better. This is, the 19,000. Like literally this one has the Pico top here. Okay, so that's, even if you had sold a little bit before or a little bit after, whatever, even if it was a little, like a ways after as soon as they cross, that's when you want to take big profits. Okay, and then you can see here, again, we're looking for when the red line crosses over the green line. So we're going to go see how they're so far apart from this right now. So far apart, and like still nowhere would you even consider this any type of market. So now we're coming into 2020, which is when things started to go up. And now we're going to 2021, crossing the year. This is when we had the crazy bull run, last bull run. And you can see they cross right around here. And this one is the top. So even like for me, if I was watching this and it hadn't marked this yet, I probably would have ended up selling somewhere around here or something. But even if I did, that's still 61,000. But actually, they crossed right around here, I guess. So yeah, even if you did, it would be 61. So it doesn't mark the exact Pico top. But again, if I'm selling 61,000, I did not sell this time at 61,000. And if you did anywhere up here, anywhere near where they even start to cross, like any of this, would have been way better off. I mean, the worst case, you would have sold around like 60,000 if you did it early, right? But you want to wait for them to cross. And then again, the indicators, the chart will mark this thing when it believes it's at the top. And let's go. Yeah, and so then where are we now? So we'll scroll along, and you can see now here we are, right? And some people think that this was the top, but again, we're nowhere even close to it. So would pie chart work on alt? It's a good question. I believe it probably would. But this one is literally labeled Bitcoin. But I think it would work. Look, I'll tell you, I'll be very, very clear and transparent with you guys on this one. I don't know if I sold, this is a funny number. Like, I don't even know how you would know if I did that. But I sold Bitcoin. I bought Bitcoin, like, majority of my Bitcoin between $100 and like $500, right? And that whole 2012, 2013 era. And I exited fiat then too. And I had a bunch of Bitcoin back then, like a lot, right? And I've sold it my entire time since then. I never had a job. And I would sell it to pay for things, right? To live. And so I've been living off Bitcoin since 2013. So I didn't just sell Bitcoin at 7,000. I don't even know where you got this number. Maybe I said it in a video one time, but like I sold Bitcoin at $800. I've sold Bitcoin at $1,200. Like I've sold Bitcoin the entire time, just to survive, right? Because I didn't have paychecks back before I built this company that I have now. Anyway, moving forward, we can see that these two lines haven't converged yet. And so we want to pay attention to them. This to me is the most accurate, but again, we don't want to go off any one indicator alone. So the next indicator we want to look at is the RSI, or Relative Strength Index. So if we just look at this alone, this is what you're going to go. And oh, guys, by the way, it's really important to make sure that you're on the right Bitcoin chart. You want to get one that goes all the way back to the very early days. And so you're going to want to look at the Bitcoin. You're going to type in Bitcoin Index. And then you're going to want to click on this one here, which is the Bitcoin All-Time History Index. This is the chart that you're going to want to use here to do your main charting here. So because other ones don't go back so far, because the centralized exchanges, it's just most of them track are going back to like 2015, 16, something like that, maybe 14. So we're going to draw a trend line here, guys, and we're going to go from here. No, sorry, not there. Trend line. From here to about here, extend it all the way out, and about there. And we're gonna do the same thing on the bottom here. And the point I wanted to make too is that I am not a technical analyst. I am not, these were taught to me. I'm not a genius when it comes down to trading, and I don't try to trade. But what I want to do is I want to have some sort of indication and data that seems to make sense to me, of giving me some sort of comfort in when I want to be entering and exiting the market, right? Because even though I only have, like, I have some Bitcoin that I keep in cold storage, and I don't know that I will ever sell those ever. I just feel vulnerable when I sell some of my Bitcoin, even if it is these tops. But I've got so much more in my portfolio that is in a more liquid position, that like the Bitcoin in my cold storage is something that I never plan on really touching. I probably will never need to touch it for my entire life, right? Future generations, whatever. And that's always my reserve. I just feel comfortable keeping it there more than anything else. And then I have wrapped Bitcoin that I am more open to playing with. And so I've never tried to time market tops or bottoms in the past. This time I'm going to, because you can literally double your stack without having to work anymore if you just do these kind of things. And this methodology gives you some really good indication of where we're at. So let's just draw some lines here, vertical line on some of these peaks, right? And so let's draw one there, vertical line over here. This is a Relative Strength Index, RSI, and over here. And we can't do it necessarily right on the peak, right? Because if you're watching these things live, you have to do it just one tick afterwards. And then a line here. Oh yeah, no, this one hasn't happened yet, right? So, and this one should be a little bit, yeah. So, okay, so let's go and look at now. We're going to look at where it says the tops are. So as you can see here, guys, when this hits the line up here and starts coming back down, this is perfectly coming into the, and even if you draw this line one tick afterwards, it would still be the same thing, right? It's still starting the first time this goes down, you're going to see the top of the market of this 2013 cycle. The same thing for the 2016-17 over here as well. And more or less the same thing. Maybe this would have been a little bit early because you also have this double top that happened in the last cycle as well. But it's pretty spot on here, right? Like if you would have sold here, you're stoked. So this gives you clear indication, guys. Let's see. Thanks, Cade. Much love to you, Cade. Okay, so guys, so that's relative strength index, right? And what we're also gonna show you here is, and this also works on the bottoms too, right? Let me draw some more lines over here on the bottom. So what if we go over here and we do trend line? No, sorry, not trend line, vertical line. I go vertical line here. And we could draw a vertical line here. And we could draw a vertical line here. One tick after. And you can see also this pretty much clearly marks when a good buying opportunity was. Market bottoms. Like if you bought in here, if you'd bought here, if you'd bought here, you're doing really extremely well. Yes, let me clear this. How does that work? Yes, thank you for reminding me. Okay, try to zoom out a bit for the green line. What do you mean? Anyway, I think you guys can see that, right? Yeah, so, okay. I subscribed Kyle when he was 40. Oh, Cade, my brother. The channel was very green at the time. So much love to you. Appreciate it. In the settings, yes, it's a label. I don't know. Guys, you guys can, again, I don't use TradingView very much at all. I literally was taught how to do this. And so I'm just sharing with you guys because I think it's pretty damn accurate here. And I've been looking for something to make my life easier so we know when to sell and when to buy. So again, this is the accumulation and distribution. So when you go to indicators, you're going to look for, this is important. You're going to type up here, accumulation, distribution with markers by Dove Caspi, the one that has all of these people following. And then you want to add it to your favorites. And when you do, you're going to come out over here like this. And so again, we're just going to draw vertical lines. One tick after when it starts to come back down. You can see over here, none of these have come back down, right? And so we're going to draw this again over here. One tick after it comes back down. Again, one tick after it comes back down. Okay, and now let's look at where this lines up. And you can see this one, it's pretty dang accurate with the 2013. The 2017 was a little late, but it's still much better than having round tripped it. A lot of people never even sold because these happen so fast. And remember, we're so used to these corrections that we just get blindsided. So having this data, being able to compare all of these charts together gives us some better perspective on where we are in the market. And so again, here as well, if we would have been able to sell somewhere around here, we can zoom in a little bit. And while this wasn't, again, it wasn't the Pico top, this one still gives, we would still have sold like 52,000, which would have been a lot better than having done it at, down here. Again, like I've always just kind of held. I've never really studied the markets as much as I have since I started this YouTube channel, which this has been tremendously valuable for me to have this channel. And then having the researchers who help bring this, and I'm learning along here with you guys. I'm not here pretending to be a magic genius. Again, I'm far too busy to be studying these kind of things all the time. So I'm just sharing as I go along with you guys, and I'm telling you guys the things I'm doing as I go along, and hoping that you're finding a lot of value from that as well. Same thing, guys, would have happened with this one over here. Same thing back in this 2013. One tick to the right. Look at this one. This one timed it almost pretty much perfectly on that market top as well. And when you guys do have this chart open, the Bitcoin all-time index, make sure that you have it set from, because it might open like this. You want to make sure that you're on log and that you're on automatic as well. All right, guys, that's going to wrap it up. I'm not going to actually do too much Q&A today because it's Friday and I've still one more call to do and I want to enjoy the rest of the day. But guys, thank you so much for being here with me tonight. I really appreciate it. I hope that you found a lot of value in alpha, and make sure that you guys share this with everybody if you found value, if you think it's helpful for people, because I was blown away when I saw this myself, and it's something that I'm definitely going to add to my toolkits. It's absolutely the most reliable thing that I've ever seen when it comes down to having some clear indicators of what we need to do to protect ourselves from the inevitable big correction that is coming. Ladies and gentlemen, thank you so much. I will catch you later. Bye-bye.